Shares of Nippon were higher after US President Trump gave the nod to its $14.9 billion bid for US steel. This cleared a major hurdle in its pursuit to secure a vital market for its growth. In China, industrial output grew 5.8% from a year earlier, but slowing from 6.1% in April and missing expectations for a 5.9% rise. It was also the slowest growth since November last year. Retail sales, however, rose 6.4%, much quicker than a 5.1% increase that we saw in April, and forecasts for a 5.0% expansion, marking also the fastest growth since December 2023. Retail sales were supported by a strong spending on a Labor Day holiday and a heavily government-subsidized consumer goods trade-in program. Another busy week as the group of 7 countries convene in Canada. Trade, latest flare-up in Middle East, Russia, Ukraine, will put geopolitics at the top of the agenda. Trump had said ahead of the summit that he anticipates reaching new trade agreements. In addition to the G7 nations and the European Union, other countries, including Ukraine, Mexico, South Africa, India, and Australia, were invited to attend. Hello, welcome back to Global Business Insights, where we take a closer look at the main business headlines moving markets all over the world. In our deep dive, we continue to look at the impact of lingering conflicts in the Middle East on oil prices. And in the UK, the Chancellor Rachel Reeves has said she will do everything to protect people in the UK from the knock-on economic effects of the conflict between Iran and Israel, adding that nothing is off the table in coping with the potential threat of rising oil prices. Rachel Reeves will this week also announce a £725 billion 10-year infrastructure plan for Britain, starting with a new program to repair crumbling bridges, flyovers and tunnels. The Paris Air Show kicks off today, beclouded by last week's Air India disaster and flaring tensions in the Middle East. All these will be dominating conversations there. On the data front, we do get the ZEW survey of economic sentiment in Germany and Europe released tomorrow. We get UK inflation data also out on Wednesday. The Bank of England's monetary policy decision is on Thursday, and most analysts expect the Apex Bank, that's Bank of England, to hold rates at 4.25%. We also expect Nigeria May inflation data this week, possibly later today. The main event this week must be the 2-day Federal Open Market Committee's monetary policy decision. That's the US Fed, FOMC, ending with the presser on Wednesday, at which we get Jerome Powell's current view on the balance of risks to the Fed's dual mandate of price stability and maximum employment. The FOMC is expected to leave the federal funds rate unchanged at 4.25% to 4.5%. We also get the latest release of its quarterly summary of economic projections, SEP, updating the March SEP, where the committee noted 2 quarter-point rate cuts through the end of the year. Given the past week's benign inflation data and small cracks in the labor market, initial jobless claims have averaged 240,250 over the past 4 weeks, up 27,750 since the beginning of the year. Investors will be interested in any shift in the narrative towards easing interest rates in the US and how the Fed is reading the impact of tariffs on the macroeconomics. Egypt has signed a financial closure deal. That was on Sunday with Norwegian renewable energy developer Scatec for a 1 gigawatt solar plant, which will move the project into its construction phase. The Egyptian cabinet said the project will involve a $600 million investment. and in Nigeria, where the Iran-Israel conflict is pushing up prices of crude oil. We expect higher petrol and diesel prices if indeed oil prices remain higher. Dangote Petroleum Refinery is offering some respite. It says effective 15th of August 2025, it will begin distribution of PMS and diesel nationwide as it plans to deploy 4,000 CNG tankers. This, Dangote claims, is part of a broader commitment to reduce the high logistics costs and give customers better prices, enhancing energy efficiency, promoting sustainability, and supporting Nigeria's economic development. Some analysts will argue that it strengthens Dangote's monopoly power on the supply chain, especially as prices of products could be going up if the Middle East conflict, like we say, persists. In a further show of market strength to lock in more buyers, the refinery is tempting marketers with the offer of a credit facility to those purchasing a minimum of 500,000 litres, allowing them to buy an additional 500,000 on credit for 2 weeks under bank guarantee. Also in Nigeria, the central bank has announced temporary suspension of dividend payments for some banks set to be under regulatory forbearance. These banks will not be able to pay dividends, and there will be some other restrictions until capital adequacy and provisioning levels are independently verified to be fully compliant with the required standards. The implications are that we could be seeing higher loan loss provisioning and use of fresh capital to clean up and improve the quality of the risk asset portfolio. Though profits will be reduced by additional provisions, there is improved capital retention, which could help stock values. The move is a proactive measure to avert the impact of potential shocks on balance sheets of the more vulnerable banks as the environment presents heightened geopolitical risks and economic growth is held back by headwinds such as high inflation. Recent events have indeed jolted the scenarios for oil prices as the risk of supply shortages driven by more toxic geopolitical developments led to a premium of at least $7 to $10 on top of previous projections. The best case scenario, in which we see a gradual calming in the tensions and no issues with transportation of crude out of the region, will still raise the projections for 2025. That's the rest of the year, to about say $65 to $70 range. That's for Brent crude, with occasional spikes and more volatility than usual, as we could still get flashpoints in the external context, exacerbating the supply side shocks. Trump has said he still wants to reach a nuclear deal with Iran, and Tehran has left the door open to talks, but not while under attack from Israel. Still, in the best case, the US administration then may still have space to forge an agreement. The more likely scenario is a lingering instability with a somewhat extended cycle of retaliatory and more attacks on Iranian nuclear facilities, dragging in proxies, bypass attacks on Israel and its allies. An attack on US interests cannot be ruled out. This will not lead to a major conflict. That's a most likely scenario, as a financially constrained Iran and Middle East nations are unlikely to wade into the crisis, leading to an agreement, but not one in the short term. This could imply Brent shooting up $70 to $75 a barrel. An early deal could see crude at the lower end of that range. Fears of crude oil supply shortages due to conflict in the Middle East could arise from reduced Iran production and disruptions to the Strait of Hormuz, which is a vital shipping passage, about a fifth of the world's total oil consumption, or some 18 to 19 million barrels per day of oil could be impacted there in terms of if there are issues. Condensate and fuel also included in that number. A prolonged blockage of the strait, in a worst-case scenario, analysts say could lead to doubling crude oil prices to a record high of $150 per barrel for Brent later this year. Trump, like we said, wants to be seen as both peacemaker, and he also needs low inflation, and the opposition will flag an unhelpful renewed US military involvement in the Middle East as a sign of failure of his government, as a massive war further burdens consumers all over the world, unprepared for another geoeconomic shock. The US will pressurize Israel and other Middle East allies to work out a solution that brings Iran to the negotiating table one way or the other, averting what many are calling the worst case. Global stocks sank last Friday after Israel launched a wave of airstrikes on Iran, pushing energy prices higher and adding another layer of complication to already heightened geopolitical tensions. But markets are coming out from the initial rattling, looking to shrug off the possibility of a worst-case deterioration, but still cautious. News of Renault chief executive Luca de Meo's decision to leave the French car maker and of him being lined up to take charge at luxury goods group Kering has created a stir. Exit of Renault CEO leaves the company leaderless at a time the group is expected to explain a new strategic plan and further unwind the Nissan alliance. The luxury sector is also facing challenges in a tougher market context, with many brands undergoing restructuring to strengthen their competitive position. Luxury group Kering shares rose in early trading. Still on Nissan and Renault, Nissan Motor CEO Ivan Espinosa said the automaker plans to reduce its stake in French partner Renault. Both had said earlier in March they had agreed to reduce their required minimum stake in each other to 10% from 15%. Under the agreement, any share sale has to be coordinated with the other party and includes a right of first refusal. The United States is reported to be currently weighing the restriction of entry to citizens of an additional 36 countries, including Nigeria, in what would be a significant expansion of the travel ban announced by Donald Trump's administration early this month. The reports claim that they were identified based on varied benchmarks that include the administration's estimation of ability to meet issues like having competent or cooperative central government authority to produce reliable identity documents or civil documents, or being able to manage. The United States is reported to be currently weighing the restriction of entry to citizens of an additional 36 countries, including Nigeria, in what could be a significant expansion of the travel ban announced by. The United States is reported to be currently weighing the restriction of entry to citizens of an additional 36 countries, including Nigeria, in what could be a significant expansion of the travel ban announced by Trump's administration early this month. The reports claim that there were identified benchmarks that, in the administration's estimation, these countries were failing to meet. Some countries had no competent or cooperative central government authority to produce reliable identity documents or other civil documents, or they suffered from widespread government fraud, while others had large numbers of citizens who regularly overstayed their visas in the United States, as well as claims of anti-Semitic and anti-American activity while in the US by people from some of those countries. Asian shares proved resilient today, and oil prices were trimming previous session gains, somewhat volatile as geopolitical conflict between Israel and Iran showed little sign of cooling. Brent under $74 a barrel in early morning trade, and so far US futures are looking up as Asian stocks mostly closed in positive territory. Well, that's all we have time for in this edition of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.